Welcome back to the Property Finance Podcast. So today I want to talk about purchasing below market value. So we did record an episode on this previously, probably 12, 18 months ago, but this is probably one of, again, the most requested episodes that we get. People are constantly saying, how do I buy below market value? What are lenders' views on it at the moment? How are people negotiating it? What can I do to access these kinds of deals? So I want to talk through what purchasing below market value actually is, the finance products that are available, etc. So what I would say as a caveat early on is this is talking about bridging finance. So if you're doing buy-to-lets, commercial mortgages, for example, you're always going to be off the purchase price as opposed to the market value. So I think it's worth keeping in mind that if you're looking at buying below market value, you're probably going to have to bridge it to begin with and then do a buy-to-let or commercial mortgage off the back of that, maybe after 6 months worth of ownership. So the way people are finding these at the moment are there are quite a few distressed landlords out there at the moment. Obviously, interest rates have been climbing for the last couple of years. People are getting to the point where they're coming off of fixed rates. They maybe were on a 5-year fixed rate or a 2-year fixed rate. They're now coming off of those. They're now coming on to interest rates that are significantly higher. I remember 2-3 years ago, we were putting people onto 2.99%. We're now putting people onto 5.99%. It's an insane difference in the market. And the problem you've got is on low yielding properties, people are just struggling to make these deals work. So it could be single lets, it could be blocks of flats, it could be anything. But landlords are getting to the point where they're going, this just doesn't make any sense anymore. I just need to shift it as quickly as possible. They may even have gone on to variable rates, at which point they really need to shift that on as quickly as possible. So people are picking up these deals through letting agents, sources, estate agents, whoever it may be. There are plenty of these sites that are very similar to We Buy Any Car. They're now We Buy Any Home. And there are people picking up these below market value deals from distressed vendors and landlords all the time. And we're definitely seeing that volume increase. So what happens is you might pick something up that you think is below market value. You've then got to try and convince the valuer that it's below market value. Now, where we have the benefit of going into a bridging loan rather than a buy-to-let or a commercial mortgage is that with a bridging lender, we have a bit more control over the lenders. We have a little bit more control over the valuer in that when it comes to a buy-to-let commercial mortgage, they always tell the valuer what you're buying it for. When it comes to a bridging loan, they don't tend to give that information away as easily. So the valuer actually has to go out and do a full, proper market valuation. They have to go out and say, yeah, okay, I believe it's worth X, Y, Z based on whatever comparables they can find, as opposed to the buy-to-let and commercial mortgage valuers who tend to know the purchase price up front. So what you tend to find is going through a bridge, you're just in a better position moving forward. And they don't do this natural default position of, oh, this is what you're paying for it, so this is what we're going to value it at. You tend to actually get a proper market valuation. So at that point that the valuation's taken place, that's when obviously the lender's going to turn around and say, well, look, the valuation's come back all right. We're happy lending at 70, 75, 80% of market value. Here you go. What they will tend to do is, depending on the lender that you go with, you might find that they cap at a certain percentage of purchase price. So they might do 80% of market value, but a maximum of 90% of purchase price. We do have some lenders that don't have a cap, which is a lovely position to be in because we've had some deals where we've gone up to 117% of purchase price. That was a recent case study. It just means that it covers a bit of your stamp duty, a bit of some of the other initial costs as well. So quite nice when you buy below market value because obviously then you don't have to worry about necessarily putting in a deposit, and actually you don't have to worry about putting in stamp duty, legals, etc. So in terms of lenders availability, so this is one of the big things we get asked is, well, actually, are the lenders available for this? Are lenders going to lend on this? Are they happy? I would say that we're getting, on average, every single day, a new lender that will lend against market value as opposed to purchase price. So there is most definitely an appetite for this stuff at the minute, which is really, really good for us because we're going to get a huge quantity of these deals coming in. In terms of negotiating them, obviously that's just a case of finding a good source of these deals as well. But yeah, I would say probably one of the biggest strategies that we see at the moment is buying below market value. And most definitely, I think that's going to continue growing as we go through this weird transition period that we've been in for some time. So yeah, in terms of buying below market value, I would definitely say there's an appetite out there. There's definitely a good source of the deals. And in terms of getting onto that initial bridge, there shouldn't be any difficulty, obviously going through that transition. And in terms of once you've bridged that property, there are some lenders that will do a day one refinance, but they are bloody expensive. I would say minimum you want to be waiting is 3 to 6 months before you refinance. And obviously if you're flipping, then doesn't really make a huge amount of difference, the refinance options out there. But yeah, 3 to 6 months, I would say, is the minimum hold at the moment to get the best possible interest rates. Hopefully you found that really useful. Thank you for listening. I will catch you on the next one.